in the bustling streets of Wall Street, where fortunes are made and lost in the blink of an eye, there exists a timeless wisdom that transcends the fickle trends of the market. Imagine a world where the cacophony of stock tickers and financial reports fade into the background, and in their place emerges the steady voice of reason and prudence. This is the world of The Intelligent Investor by Benjamin Graham, a beacon of clarity in the often murky waters of investing, in a realm where speculation reigns supreme. The tale begins with a young investor, eager to conquer the stock market and claim his slice of the American dream. Armed with ambition and a thirst for wealth, he dives headfirst into the turbulent sea of stocks, hoping to ride the waves of fortune to prosperity. However, as the market gyrates wildly, he soon finds himself adrift, battered by the whims of speculation and the harsh reality of financial loss. In his darkest hour, when all seems lost, a mentor emerges from the shadows, offering a guiding light amidst the chaos. Enter Benjamin Graham, the legendary investor and author of The Intelligent Investor, whose timeless principles of value investing provide a beacon of hope for our protagonist. With wisdom forged in the crucible of experience, Graham imparts his knowledge to the young investor, teaching him the art of prudent investing in an unpredictable world. As our protagonist delves into the pages of Graham's seminal work, he discovers a treasure trove of insights that defy the conventional wisdom of Wall Street. Instead of chasing the latest fads and hot tips, Graham advocates for a disciplined approach based on fundamental analysis and a margin of safety. He preaches the gospel of patience and rationality, urging investors to focus on the long-term intrinsic value of a company, rather than its short-term fluctuations. At the heart of Graham's philosophy lies the concept of Mr. Market, a metaphorical figure who personifies the irrationality of the stock market. Like a manic depressive neighbor, Mr. Market offers to buy or sell stocks at prices that fluctuate wildly from day to day, driven by fear, greed, and irrational exuberance. Instead of succumbing to Mr. Market's emotional roller coaster, Graham advises investors to treat him as a resource, capitalizing on his mood swings to buy low and sell high. But Graham's wisdom extends beyond mere stock picking. He also delves into the psychology of investing, exploring the cognitive biases and emotional pitfalls that often lead investors astray. From the allure of speculative manias to the dangers of overconfidence, Graham shines a light on the psychological barriers that hinder rational decision-making in the market. As our protagonist absorbs these timeless lessons, he undergoes a transformation, shedding the reckless impulses of his youth in favor of a more measured approach to investing. No longer swayed by the fleeting whims of the market, he embraces Graham's philosophy wholeheartedly, building a diversified portfolio of undervalued stocks and bonds with a keen eye towards risk management. Through the highs and lows of the market, our protagonist emerges not as a conquering hero but as a humble disciple of Graham's wisdom, content to reap the rewards of compounding returns over time. Armed with the principles of value investing, he navigates the ever-changing landscape of Wall Street with confidence and poise, secure in the knowledge that he is following in the footsteps of one of the greatest investors of all time. In the end, The Intelligent Investor is more than just a book. It is a manifesto for a way of life, a roadmap to financial success grounded in prudence, patience, and discipline. As our protagonist closes the final chapter, he reflects on the journey that brought him to this point, grateful for the wisdom imparted by Benjamin Graham and eager to share his newfound knowledge with the world. And so, armed with the timeless principles of value investing, he sets forth into the world, ready to conquer the markets with a steady hand and a clear mind. Expanding upon the foundational principles outlined in Graham's work, Let us delve deeper into the nuances of value investing and explore its application in different market conditions. One of the core tenets of value investing is the concept of margin of safety, which serves as a buffer against the inherent uncertainties of the market. By purchasing securities at a significant discount to their intrinsic value, investors can protect themselves against downside risk and increase their chances of achieving favorable returns over the long term. Moreover, value investing emphasizes the importance of thorough research and analysis in the investment process, rather than relying on speculative trends or market sentiment. Value investors diligently study the financial statements and business fundamentals of companies to identify opportunities that may be overlooked by the broader market. This rigorous approach requires patience and discipline, as successful value investing often involves waiting for the right opportunity to arise, rather than chasing short-term gains. In addition to individual stock selection, value investing also encompasses the construction of a diversified portfolio that balances risk and reward. By spreading investments across different asset classes and industries, investors can mitigate the impact of any single company or sector experiencing adverse performance. This prudent approach not only reduces the overall volatility of the portfolio but also provides opportunities for capital appreciation in diverse market environments. Furthermore, value investing encourages a contrarian mindset that is willing to go against the prevailing market sentiment when warranted. While the herd mentality may lead to temporary fluctuations in stock prices, value investors recognize that true value is determined by the underlying fundamentals of a company rather than the opinions of the crowd. By maintaining a long-term perspective and remaining steadfast in their convictions, value investors can capitalize on mispricings in the market and generate superior returns over time. However, it is important to acknowledge the limitations of value investing and the inherent risks associated with any investment strategy. While Graham's principles have stood the test of time, they are not immune to periods of underperformance or market downturns. Value investors must remain vigilant and adaptable in response to changing market conditions, adjusting their strategies as needed to preserve capital and achieve their long-term financial goals. In conclusion, The Intelligent Investor by Benjamin Graham offers a timeless framework for successful investing based on prudence, patience, and discipline. By adhering to the principles of value investing outlined in Graham's work, investors can navigate the complexities of the market with confidence and achieve sustainable wealth accumulation over time. Through diligent research, careful analysis, and a contrarian mindset, value investors can identify opportunities that others may overlook and position themselves for long-term success in an ever-changing financial landscape.